Everyone tells you debt is dangerous, that it ruins countries. Look at Greece, Argentina, even Sri Lanka, all crushed under the weight of borrowing. But what if I told you there's a country doing the exact opposite? A place where the government keeps borrowing year after year and the country keeps getting richer. That country is Norway. And the way they use debt, it's not random, it's not risky, it's actually genius. In this video, we are going to break down why most countries collapse under debt, what Norway is doing differently, and finally the one hidden policy that flips the rules of economics on its head. And trust me, you'll want to stay until the end because the way Norway turns debt into wealth will completely change how you see modern economics. When you hear the word debt, what comes to mind? Probably panic, recession, maybe even riots in the streets. And honestly, you're not wrong. Around the world, history is filled with countries that borrowed too much and paid the price. Let's start with Greece. In the late 2000s, their debt spiraled out of control. They couldn't pay back what they owed, interest piled up, their economy shrank, unemployment hit nearly 28% at one point, people were protesting, banks were limiting withdrawals. It was a national nightmare. Then there's Argentina. They have defaulted on their debt multiple times in just 2 decades. In 2001, they declared the largest sovereign default in history at the time, over $100 billion. And today, they're still stuck in an endless cycle of borrowing, crashing, borrowing again. Inflation is out of control. Poverty is rising. Trust in their government is at rock bottom. Sri Lanka, a more recent example. In 2022, the country literally ran out of money. They couldn't import fuel, medicine, or food. Debt repayments crushed them. The president flooded the country. Chaos broke out in the streets. So yeah, debt is scary. It's not just a number in a spreadsheet. When a country owes too much, it can't invest in its people. It can't build new infrastructure, improve education, or fix healthcare. All the money goes into interest payments and the economy suffocates. And this isn't just happening in small economies. Even large developed countries like the US, Japan, and the UK are sitting on trillions in debt. And people are starting to ask, how much is too much? At what point does debt stop being useful and start being destructive? Now here's where things got interesting, because despite all this, there is one country that keeps borrowing and somehow it's not just surviving, it's thriving. This country has one of the strongest economies in Europe, high standards of living, low unemployment, strong healthcare, free education, and yet it continues to borrow money. And here's the real twist. This country isn't being reckless. It's following a rule, a system, a strategy so carefully designed that it turns debt into an asset. That country is Norway. But how does it work? Why does Norway take on debt when it has one of the largest sovereign wealth funds in the world? What does it know that the rest of the world clearly doesn't? By almost every measure, Norway shouldn't need to borrow a single cent. This is a country sitting on $1 trillion oil fund, the largest sovereign wealth fund in the world. Its population is barely 5.5 million, and yet its economy ranks among the most advanced globally. Free healthcare, free education, even at the university level, one of the highest standards of living in the world, low unemployment, strong currency, stable inflation. So here's the confusing part. Why is Norway still borrowing money? Why would a country this rich choose to take on debt? It sounds completely backward. If most countries borrow out of desperation, Norway seems to borrow by design. And no, this isn't some budget mistake or accounting trick. Norway borrows money every year, on purpose. But here's where things get even stranger. They don't just borrow while having the world's biggest rainy day fund, they borrow while barely touching it. That's right, the government isn't diving into the oil money every time they need to build a road or fund a school. In fact, they treat that fund like it barely exists. So what's going on? To understand this strange behavior, you have to look at one of the most brilliant fiscal rules any country has ever put in place. A rule that basically says you can be rich, but you are not allowed to act rich. And this isn't just a cultural thing, it's a written law. This rule limits how much of Norway's oil wealth the government is allowed to use in its annual budget. And instead of spending freely, it borrows from markets while keeping the bulk of its wealth intact. Now, I know what you might be thinking. Why borrow when you are already rich? That's the big question. So how does a country with more than $1 trillion in wealth still justify borrowing money? Well, welcome to Norwegian economic wizardry. You see, Norway doesn't just randomly decide to take loans. It follows a very specific and very clever fiscal rule that almost no other country uses the same way. It's called the handlingsregelen, or what's commonly known as the 3% rule or fiscal rule. Here's the basic idea. The government is only allowed to spend up to 3% of its sovereign wealth fund each year, not the whole fund, just 3% of its expected annual return. Now think about that for a moment. Norway has over $1 trillion saved up, yet it only allows itself to spend the returns, not the actual money, and even then only a fraction of it. This rule was introduced back in 2001 and it was designed with one purpose: protect the future. Norway knows its oil won't last forever, so instead of blowing through its wealth now, it treats the oil fund like a national savings account, one that must benefit both today's citizens and future generations. So the government caps itself. Will only touch 3% of the returns this year, no more. If the expected return is $30 billion, they can only use that amount, the rest stays invested. But wait, how does that connect to borrowing? Here's where it gets really interesting. Since the government limits how much oil money it can use, but still wants to fund big things like infrastructure, welfare, education, and defense, it strategically borrows from financial markets. Not because it has to, but because it chooses to. And unlike countries that borrow recklessly, Norway borrows with strict discipline. It has strong credit ratings, low interest rates, massive collateral thanks to the oil fund, and lenders are more than happy to offer loans because Norway's repayment risk is practically zero. This system has two key advantages. It prevents overspending and economic overheating, which often happens with oil-rich nations. It gives Norway the flexibility to respond to financial challenges without ever dipping into its savings. And here's the twist. Norway's debt doesn't hurt its economy, it strengthens it. By using only a small percentage of its wealth and borrowing wisely, Norway keeps its economy stable, its wealth intact, and its people protected from global shocks. But wait, how does borrowing money actually make Norway richer? Now, let's be honest, even if a country is rich, borrowing still sounds risky. Shouldn't it just use its money and avoid debt altogether? That's the logic most people would follow. But in Norway's case, debt isn't a weakness. It's actually a strategic tool that makes the entire economy stronger, especially for businesses and the private sector. Let me explain. When a government borrows money by issuing bonds or securities, it does more than just raise funds for itself. It actually creates something very important for the entire financial system: a benchmark. You see, in global finance, government bonds are considered the safest assets. They set the tone for everything else from corporate loans to home mortgages. And this is exactly what Norway keeps issuing debt to maintain a stable and active bond market. Without public borrowing, there is no benchmark. Without benchmarks, private companies have no solid foundation to price their own loans. And when that happens, interest rates get messy, markets get unstable, and borrowing gets expensive for everyone else. Norway understands this. So by keeping its bond market alive, it helps Norwegian businesses borrow more easily and affordably. But it doesn't stop there. The government also uses some of its borrowing to stimulate strategic areas of the economy: infrastructure, technology, education, green energy. These investments don't just benefit the public, they create opportunities for private sector growth. For example, when Norway invests in clean energy projects, dozens of private companies win contracts. When the government builds digital infrastructure, startups have better platforms to grow. And when it funds education, it creates a highly skilled workforce that attracts foreign investment. In short, smart public debt fuels smart private development. And thanks to its strong fiscal rules and huge oil fund, Norway never borrows out of desperation. It borrows from a position of strength. That means low interest rates on its loans, high investor confidence, and a financial ecosystem where both the public and private sectors benefit. In many countries, public debt crowds out private investment, but in Norway, it does the opposite. It catalyzes it. Now here's where the genius really starts to shine, because not only is Norway borrowing money safely, it's also growing its wealth while doing it. Alright, let's finally answer the big question. How does Norway, a country that borrows money, actually get richer because of it? It all comes down to three things working together: the 3% rule, a massive, well-managed sovereign wealth fund, and a strategic borrowing system that most countries never dare to try. Let's break it down. Norway's oil fund, officially called the Government Pension Fund Global, is worth over $1.6 trillion. It's invested all over the world in tech companies, green energy, bonds, real estate, and more. And every year, it generates billions in returns, like a national-level investment account. Now, under the 3% rule, the government can only spend up to 3% of the expected annual return from that fund. Not the actual fund, not even all the profit, just a controlled slice of the profit. That means Norway's wealth keeps growing year after year, untouched, compounding. But here's the genius part. Instead of dipping into that fund for every expense, Norway borrows money at ultra-low interest rates. Why? Because the returns from the oil fund are almost always higher than the cost of borrowing. Let's say Norway's oil fund earns a 7% return this year and they borrow money at 2% interest. That's a 5% profit margin at the national level. It's the same logic that smart investors use. Why sell your high-performing assets to pay for something when you can take a low-interest loan and let your money keep growing? Norway is basically doing what wealthy individuals and corporations do, using cheap debt to fund its needs while its investments grow untouched in the background. And because they borrow responsibly and follow strict rules, their national balance sheet stays strong. Ratings agencies trust them, markets trust them, and the Norwegian people trust the system. So the result is this. The country gets what it needs today: infrastructure, schools, innovation, public services, while the oil fund grows bigger every year, quietly compounding in the background. And the national debt remains stable and manageable with no fear of collapse. Norway isn't just surviving with debt, it's willing with debt. While other countries borrow out of panic, Norway borrows out of strategy. It turns borrowed money into growth and lets its wealth snowball quietly in the background. That's how debt makes Norway rich, and yes, it is genius. Consider subscribing and thanks for watching. Bye.